In this episode of the Construction Lending Podcast, Sean Ferris, CEO of Land Gorilla, is joined by Mitzi Hutchens, Director of Special Programs at Thrive Mortgage. Together, they take a deep dive into construction lending as they explore the crucial role of loan officers and draw coordinators and the profound impact of these programs on local communities.
How big is being able to offer these programs from a recruiting standpoint?
Is pretty significant.
What's a great interview question that you like to ask somebody that's interviewing for a draw administration role?
I'll be honest, my question might be a little different from others.
How do you handle when things go wrong or off the rails? Do you have any advice on how to keep them on the rails and keeping everything moving forward?
One thing that we really try to focus on and really zone into is staying in constant communication with both builder and borrower.
I'm excited to be speaking with Mitzi Hutchens of Thrive Mortgage. Mitzi, welcome to your first time on the Construction Lending Podcast. I understand that Thrive Mortgage launched construction programs about 9 years ago. Why don't you tell me a little bit about your loan programs at Thrive?
Sure. So right now we have a 2-time close option. We had suspended our 1-time close option. However, we are lifting that suspension within a week. So very excited about that. A little bit about why we suspended the 1-time close, as you can imagine, and everyone else in our construction lending arena is, due to the ever-changing market that we had experienced, right, over the past year. And, rates, increasing from what we've experienced. However, we have changed some of our terms and updated it to make sure that we're really looking out for our borrowers, our company. So because of that, we are lifting our government OTC suspension literally within a week. I'm trying to get it out the door before Thanksgiving. So very excited about that.
Yeah.
So 2-time close and 1-time. On the 2-time close, we offer what we call your government 2-time and your conventional and your jumbo, right? Mm-hmm. So the program is going to really be based on what that end loan is. So how are you structuring the permanent loan? If you're structuring it as an FHA, then we're doing an FHA, a construction loan with only 3.5% down. If you're, doing a jumbo permanent loan, we have a couple of different options. One is just your normal jumbo, 20% down. However, where we are really competitive, from amongst other lenders out there is you could do a jumbo construction loan with Thrive Mortgage with only 5% down. People look at us and say, how do you do that? How do you reduce risk, when offering a 5% down jumbo? Well, it's easy, right? As long as you're setting up the program and you have specialized underwriting, processing, all those important manufacturing pieces that go along with it. But it's for those whenever you're structuring the perm as a first and second lien. We do require, whenever going that route, that we have 2 second lien lenders at all times. You and I both know, Sean, being in the industry, you never know if a second lien lender might bail, right, during a build phase, since it's over an 8 to 12 months term or 15 months. So we do require, having 2 second lien lenders out there just to reduce the risk, not only for Thrive, but for our borrowers, right? Our fiduciary responsibility is our borrowers and builders, and of course, looking out for our companies. So, on the 2-time, it's really awesome. We offer the VA, FHA, normal, conventional. I'm excited about conforming loan limits going up the first part of 2024, which we are already utilizing the higher conforming loan limit as of yesterday. So excited about that. And then of course your VA 2-time close. But with the 1-time close, we are announcing next week, government 1-time close, your FHA and your VA. Your FHA is just going to follow suit to agency. It's your 3.5% down, 96.5% financing. We do go down to a 640 minimum score, which is pretty competitive. VA, we're doing the 100% financing following agency guidelines, again, minimum score of 640. Those are awesome programs. Going the OTC route is you have less risk associated since there's only one closing. There's no requalifying, on the back end. We don't have to order a new appraisal. We just have to get that final inspection. And then, of course, your normal inspections and CO and permit and so forth that's needed.
Awesome.
But yeah, that's what we're doing today. And we're working on rolling out our conventional one-time close. Probably will be first part of Q1 of next year. But yeah, we're really excited to, lift the suspension of our Govy one-time close.
Now that's just absolutely amazing. I always get excited on the Govy stuff. Is it 1% down on the VA? Can you do 1% down on VA, or is it 3.5 is kind of the standard across all the Govy stuff?
So on our VA one-time close, we are doing 0% down. So we are offering the 100% program. Yes.
What an amazing loan program.
Yes, it is. I mean, we know that, your maximum financing when doing new construction single close is going to be based off the acquisition or NOV, lesser of the two. Mm-hmm. And then acquisition is based off a seasoning of the lot requirements, but we are offering up to 100% financing. So yeah, it's a pretty cool program.
One of the most complicated, but one of the most rewarding too, to be able to provide.
Yes, I agree. Most complicated, but very passionate about serving our, veterans who have served, all of us in our country. So.
Awesome. Now you mentioned that, hey, you briefly put it on pause, and a couple things, pop into my mind when I hear that is, we were in a rising rate environment, not just a rising rate environment, but, an aggressive rising rate environment within a, call it sub 24 months, almost in 12 months, we just saw just amazing changes to that, and were you offering like a float down option and like, hey, they were escalating so much that it made the secondary opportunities could put you, almost underwater if you're not covering your spread?
Right. Yes. And that's what was challenging is, what you mentioned being in that interest rate increasing environment, right? So we were offering a ceiling maximum guaranteed rate. That was locked in before closing. And, that rate looked, very close to the current market rate. We did have a cushion built in of about, 1% or so, which at that time we had not experienced rates jumping 3% in a matter of 7-8 months. Yep. And so it was new to all of us in the lending arena, right? Not just Thrive, but everybody. And because of that, we have restructured our program with offering a higher ceiling rate, one that we're comfortable with, being able to still guarantee that ceiling rate and then offering a float down. Now, it does not look, as close to market rates as you see today, but again, it's really just how can we protect our customers and everybody involved, in a construction loan transaction.
Yeah, no, I love the strategy behind, at what time, what does your margin need to be? What do you need to pad it with the float down? And, it makes sense, hey, interest rates are historically low. You want to have a lot more padding because they have room to go up. Right. Now, right, yes. They're already up there. How much more tolerance is there above, say, 8%? Right. Historically, we've seen interest rates get 17, 18 plus percent, not saying that that's going to happen, but, kind of loses its impact, after a certain point where everything slows down so much. So I get so fascinated with, strategies around, how to price and, how to manage your margins during construction and prepare for a one-time close versus a two-time close. And really, what you spoke to earlier about you're looking out for your borrowers, you're looking out for your company, and those are the great two objectives right there to keep in mind, throughout that strategy. Yes. Now, you did talk about, I'm really interested in that jumbo loan, 5% down jumbo loan. That just, you don't see that. You don't see that at all. And that's being offered today.
Uh-huh. Yes, the jumbo two-time close, yes, is being offered today at, with as low as 5% down when that permanent loan is structured as a first and second lien.
All right, Mitzi, you mentioned this jumbo at 5%, super interested on that. Why don't you tell me a little bit more about, is this available in every state? Can I go put in an application today to build our own home here in California? how does that work with Thrive?
Yeah, good question. So we are, licensed in multiple states, as Thrive Mortgage. Now, when it comes to construction lending, we are the majority of the states that we're lending in right now is going to be Texas-based, your Carolinas, Florida, Colorado, Washington, Ohio. That's our concentration right now with construction lending, is we're really offering these programs, in those states currently. But we are licensed in other states, but right now that's where our heavy concentration is.
That's awesome. That's awesome. Well, thank you for that. I get really excited hearing about, all these different loan programs, and, you've got the Govy stuff in there with FHA, VA, the conventional stuff. It seems like you guys are doing a little bit of everything. Now, what about renovation? Are you guys doing any renovation lending?
We are. So, we offer FHA, VA, and conventional, your 203Ks and the home style, and then VA renovation rehab. We are trying to get a bigger lift than what we have been doing. So that's an initiative that I've actively been working on, this quarter of 2023, and going to continue actively working on it, in 2024. I think all of those are great programs. Affordability, built-in equity, so much opportunities, to customers, realtors, loan officers. So right now we are offering all programs. We would like to get a lift from what we're doing. I'm actually working on creating a renovation realtor CE course for the state of Texas right now. And then of course we'll branch out in other states where we will go out and we will offer those CE courses where realtors can get hours. So excited about that. We used to do it many years ago until, our construction really grew a lot, but now I'm back in a position where, while we're still growing construction, I can then start really working with branches and regionals closely to really focus and build renovation and educate people. I think that's what it's about, right? Is educating people, because there's so many people that are not aware of how a renovation works. And if you're able to educate them and you have the experience, then it should be a seamless process, just like any other loan.
Wow, there was a lot in there, and I got really excited when you talked about the CE coursework for real estate agents. That's wow, so needed and can be so valuable in there. But you really kind of opened the door for me to talk about, the value of these programs, right? You have, all the good renovation programs in there for consumers. You've got, all sorts of fun stuff, including the jumbo. That is just absolutely amazing. How is this? Are you seeing any kind of shift in sentiment or demand coming from loan agents or originators? What are you seeing out? Has there been any change from kind of their voice or demand for these types of programs in this environment?
Most definitely. So new construction, is rising because there's not a lot of retail out there in the regions, and nationwide, really, depending upon location and specific areas. So, the growth in new construction has been increasing month over month in what we've been noticing in the past year or so. Due to demand, and what's needed out there with resale. So yes, new construction definitely increasing, and renovation as well, because, as we know, with rates being a little bit higher, someone can go in there and find a lower cost home that needs a little bit of TLC, and they can renovate that home, make it what they want, which then will work with, what their needs are and goals with having, the dream of having ownership, right? Home ownership is what it's all about. So yes, we have been seeing an increase due to affordability right now with doing more renovation loans, and then an increase just needing construction lending because of new construction, what's going on out there right now, everywhere.
What does the conversation sound like right now? Or maybe it's kind of still the same, but do you get calls from different branches saying, hey, we want to learn more about, the construction offering and what programs we have available? Can you get us some training? Hey, we've got this group over here that's interested in coming on board. Can you talk to them about what these programs look like? How big, let's say this, how big is, the being able to offer these programs from a recruiting standpoint?
It's pretty significant. It's opportunity, right? It's opportunity for loan officers, realtors, builders. It doesn't just go back to the loan officer opportunity, but for everybody involved, especially during this, these different times, I call them, right? But it is opportunity. Loan officers have the option to learn specialty programs whenever you offer, other niche products besides your normal vanilla purchase and refinance transactions. With Thrive, we offer non-QM. We offer all kinds of stuff, but, with having the construction lending and the renovation lending it gives them another outlet to assist borrowers to build that dream home that builder, that borrower wants to build. And then too, whenever, you're looking at possibility bringing on new branches, the opportunity is always spoken about highly whenever we talk about construction and renovation, because again, it just gives our borrowers other outlets, other options, not just to go buy a resale, of an existing home or even a production, new home. We work with a lot of production builders. That's another specialty of ours. But it allows them additional opportunity and additional programs to assist with home ownership. So it is pretty significant. It does help, and it helps to have the expertise as well. A lot of people might say, hey, we do construction, but it's really having the expertise there and knowing how the programs work and having those specialty, departments built out for the needs of the manufacturing process and so forth. So to answer your question, again, it is significant. For loan officers that are joining Thrive, everyone gets so excited about these programs. And we work with them one-on-one. We don't just throw them out there to the wolves and say, hey, take the training. We help them, right? We help them. My sales partner, Brian Hurd, and myself, we're in the, in the grind with them. We have the builder conversations with the, loan officers until they get a little bit more comfortable and experience with the program. So we are there to help and support grow their business too.
Oh, that's awesome. It just reminds me of that mantra, the right loan program for the right borrower at the right time. And with your construction offering and your renovation offering and all the different ways you can do it and flexibility that you have there, it sounds like you're living up to that mantra. Now, here's a question that I always like to ask is, we understand how beneficial it is and it helps with recruiting and you get this amazing retention, benefits from it. And you're able to, serve your communities just that much better by offering these programs. There's that personal attachment that people have when, building a home, right? I'm not buying a home, I'm building my home, right? And it's just such powerful words there. What would be the implications if one day somebody snaps their fingers and, Thrive doesn't have a construction or renovation program? How does that affect the company, the people there, and the communities you serve?
Yeah. So that would be a very sad day. We would have some, very sad loan officers, builders, realtors. I haven't touched on realtors much, talking about construction lending, but they would all be involved. Title companies. There's a lot of title companies out there that specialize in construction lending, right? That know the ins and outs of a construction loan closing. So it would be a very sad day for our builders, our realtors, our loan officers. And when I say that is, like you mentioned, we're out there in the community and have built very strong relationships and partnerships, right? We're all one team. And so we all work together as one team. And if we didn't have these programs, we wouldn't be able to really make our dreams come true for our borrowers, which is so important. And then also too, our loan officers that focus in this arena, interesting to say, but they are top loan officers of our company. And so not only do they offer, their purchase, refi, production, new construction purchase loans, non-QM loans, but they offer and they specialize in construction where probably 50% of their business, Sean, is construction lending.
Wow.
Because, it's these long-lasting partnerships that they've built. And, the true loyal partnerships that we have that will be there for a very long time, with assisting our borrowers and our builders and realtors, with the programs that we offer today being 2-time and 1-time close. So it would be a very sad day if that were to happen. And not to mention, losing some really great referral business that, they have built over many, many, many years.
Mm-hmm. So it's not, what I hear you saying is just a really common theme. Hey, it just doesn't impact the balance sheet or the P&L for the construction loan department, right?
Correct.
That,
yes.
This touches, all the takeout loans or refinances or builder relationships, and we've heard others talk about how the revenue or, those other relationships that aren't hitting, coming in directly through the construction or renovation channel actually could be even greater than what that channel, generates, just simply because of, how well you do one, you get referral business, or, for a lot of depositories, they bank there, or they have lines of credit, or, all those other ancillary benefits. Now, we've really spent a lot of time talking about, kind of the profile of Thrive and how successful you guys are with these various loan programs and, some exciting announcements that you've talked about. But, when we start talking about kind of like the day-to-day, getting in the weeds, the management, post-closing management all the way through completion, you guys have been doing this for a long time. You're amazingly successful. You're pioneers in a lot of ways with technology and the solutions that you adopt. What are some of the challenges that you see post closing that have historically been challenges to other companies, but you've kind of developed like a secret sauce, and that makes you successful post closing? Can you speak to a little bit about what makes Thrive successful post closing?
Most definitely. It takes everyone involved, to start with, is from loan officers to processing, to underwriting. But then, post-close, what the most important thing is to me, and I think that's made, our programs most successful, is communication. Communication is key, as we all know, anytime we're building and developing relationships between borrowers and builders, but communication is key. There is a lot of different moving parts that go into a construction loan, not just up front, but as you mentioned, post-close. We've got to make sure that, hey, the build is on track. The home is going to be completed within term. So then we're not, we don't have any other risk out there associated with build time and borrowers going past term and so forth. But what we've done is we have several different things that we have in place. Prior to closing, we have a pre-close construction call first before we go into post-close. That's done by management. We touch on the program, we touch on the term, the build time, next steps, who's going to reach out to you, borrower and builder, next, and what will those next steps look like? We talk about the draw process. We talk about do's and don'ts during the build phase. We just really talk about all the key components to make sure that it is a successful build, and that borrower will, move into their dream home, come conversion on a one-time close or closing on a permanent loan. Now, after, the pre-construction close call, we do have our draw coordinators who will then reach out and do what we call an intro call. Okay. So during the intro call, they will actually reach out to both builder. They reach out to borrower as well. Again, they, kind of just give a recap of next steps. How does the draw process work like? How does Land Gorilla software, how is that utilized? Educate the builder as far as, different inspection options. Really get to know the builder and the borrower during that intro call, because we know that the draw coordinator is working with them monthly, day in and day out, for a good 8 to 12 months during the build phase. So that intro call is very important to continue to make sure that we have a, pretty seamless process during the build phase. Everybody is on the same page, and we're continuing to, provide the best service we can. Another thing that we have in place is, of course, our loan officers. Loan officers, they know the importance of the program. After closing and funding, that's communication doesn't stop there, right? So your loan officers are continuing to work, to communicate and reach out to builder, borrower, do check-ins, see how things are going, answer any other questions that might come up. During all these intro calls too, one thing I did not mention is, we really touch on, next steps, but then too, what happens whenever you're nearing completion? Our loan officers do a great job of explaining the program up front prior to closing. But again, continued communication is really important to our company, just to make sure we have a successful program. And then, status updates. So our draw coordinators will set up weekly meetings with our loan officers, because as mentioned before, these loan officers that are, really specializing in this arena, they have multiple loans going at one time, right? It's not your onesie twosie deals. And so we have weekly meetings where our draw coordinators will meet with their loan officers, talk about the status of the builds that are going on, until, that home is completed and we've wrapped everything up. Also, too, our draw coordinators will give updates to our loan officers during the build phase. We send out a, 50% completion status update to the loan officer, 75% completion. And then whenever they're nearing about 30 days out, the draw coordinators will send out a communication to the loan officer, so that loan officer knows, okay, it's time to start wrapping up, getting ready for that permanent closing on a 2-time close, collecting those updated documents, or we're getting ready to convert into permanent financing with that borrower moving into the property. So there is a lot that goes into it. It's not a one-person job, I would say, right? It's a team. It takes a village. It takes your team to communicate properly both ways, because, we have fiduciary responsibilities to not only our borrowers, to our builders too. And communication is key. I will always say that communication is key. Educating borrowers and builders about our program, I believe that's what sets us aside, as our company, aside from others, is really making sure that we have that communication there. And it's what has helped us be successful since, rolling out the program, oh goodness, back in 2013. So
Wow. No, communication definitely sounds like it plays a kind of a cornerstone role or foundational role in all of that. And I love how you have the steps divided up, prior to close, there's calls and discussions, making sure everybody's on the same page. The draw team gets involved post closing and goes over the good, the bad, processes, do's and don'ts, and then, how active your origination team, the loan agent, is during that. And it sounds like you have some best practices that really kind of make up that secret sauce in keeping them updated and keeping them in tune. So it's like almost like a hybrid role that the draw administrator plays in helping process the draws, but the loan originator really is the Sherpa in the process, right? The great guide that does some hand holding and offers some advice during the course of that as well. What I'm kind of curious is, what are some of the do's and don'ts that you tell borrowers and contractors during construction? I'm always fascinated with this. Like, hey, don't go changing the plans and making it a 2-bedroom from a 3-bedroom. Like, what are some of the do's and don'ts you end up talking to them about?
Yes. So, a lot of moving parts, a lot of do's and don'ts. And it's probably a lot of the do's and don'ts grow over time just because of our experience of what we've seen in the past 10 years. But some of the do's and don'ts are, as you mentioned, don't go changing your plans and specs. We certainly don't want to take any risk on, value change or the footprint of that property. Doing a 2-time close, there could be risk associated with that in itself with value and or just really changing, as I mentioned, the footprint. And then 1-time close too is, not making any changes after closing. Once it's a closed loan, it's a closed loan, right? Another thing, do's and don'ts are, having any other additional improvements go on the property outside of that construction contract. There has been multiple times where, borrower's like, hey, I want to add a pool. That's great. That's awesome. But wait until after we close your permanent loan or convert you to your permanent financing loan. There's so much that could come up, that borrowers they really don't think about, which is okay. And that's normal, but that's why we have to educate them, right? That is our job, to educate them. So that's another do's and don't. Another do's and don'ts is really, again, protecting that customer is, just reminding them that, hey, no matter if you're doing a 1-time or a 2-time, keep your income, assets, and debt in line. Right?
Don't buy a car.
Don't buy a boat during the build phase because, it's the summertime and this and that. Don't quit your job and go from a, W-2 to 1099 during the build phase. So we really try to educate them on do's and don'ts when it comes to, income type, debts. Always make sure you're paying your bills on time. That's usually a no, right? But it's just something that people, they don't think about. They don't think about that it could really affect that approval later on, especially on a 2-time close. On our 1-time close, we don't requalify, but as we all know, something could come up that's unforeseen when building a home. And in the event that if, worst case scenario, you had to revert back to a refinance due to, someone passing away, or you know what I'm saying, unforeseen things, then really just keep that in line. Keep your debt and income and assets in line. Okay. It's just, again, us looking out for our customers. So yeah, there's a lot of do's and don'ts from what we've experienced that we try to really touch on. There's so many we could touch on, but really we touch on those most important things that we've really seen, come up during the build phase.
Yeah, there's nothing worse than, having this time crunch, trying to convert by a certain date to make sure they don't get a penalty or a fee increase or lose a certain rate lock.
Right.
You get the 1004D final inspection back from the appraiser and they won't pass it because, hey, that pool is going into the back, or they're adding a guest house or an ADU in the back, and it's like, renovation. You see that all the time, but we worked out this deal to increase the walk-in closet size and take out the bath. It's like, oh man, you're killing me here.
Yes.
Always under a tight timeline too.
Right. Yes. Oh, lots of fun stuff. I call it exciting, right? Yeah. Not challenges, but just exciting. Every day is exciting when doing a construction loan.
Yeah. Change orders is the one that always, gets me, and the amount of lenders that, we don't deal with change orders, it is what it is. And it's like, well, yeah, that's a nice way to think about it, but changes happen and they're going to change behind the scenes without you knowing about it if you don't have a good change order process. And,
right. Yeah. Very important. Yeah, most definitely. Very important. And with our programs, we explain, really no change orders are allowed. That's going to affect your plans or specs. And even, if it's miscellaneous changes that might not affect the plans and specs, OTC, no changes at all. But let's say that, there's an upgrade to a front door, right? Or this or that, where the buyer has to pay money out of pocket on a 2-time close. That's where we say, call your loan officer. Before just doing anything, call your loan officer, because they're going to educate you and they're going to give you the right information. But our protocol has been, no changes. We have an acknowledgement that builders and borrowers sign, stating that those are their final plans and specs, and they are not going to, deviate from those those plans and specs. So yeah, lots of fun stuff.
Well, what do you do? You got the communication thing down, but we're talking about a perfect world. Everybody abides by the rules, but things go wrong, things happen, people break up, and, I love my builder, it's always like that honeymoon stage when they get started, but
yes,
a certain percentage of the time they're getting a divorce or they're at each other's throats by the end of a project for whatever, reasons. How do you handle when things go wrong or off the rails? Do you have any advice on, how to keep them on the rails and keeping everything moving forward?
Yeah, so, things do go wrong, right? It's not a perfect world, as you said, which would be so cool and awesome, but things are going to go wrong, and it happens, but one thing that we really try to focus on and really zone into is, by staying in constant communication with both builder and borrower. We know if something is going to derail and go off the, rails later, so we try to make sure we tackle that up front. We set up calls with both builder and borrower if there's a dispute or if something comes up where there's some kind of disagreement. Is, hey guys, let's get on a call, let's work it out, let's get on the same page, let's see what options there are on both sides. So we really try to assist both builder and borrower. Now we always claim we are not an attorney. We cannot advise, right, or give any legal guidance. However, we try our best to, just to help and assist with trying to work out any challenges, that do come up during the build phase. There's going to be times that, hey, something happens when a builder and borrower both walk from the property, and there's nothing you can do in that event, right, except finish the home, sell it, and unfortunately have to foreclose. So, but in the event that, we do know of something, and there is a red flag going on, then we'll have calls with builders, and we'll have calls with borrowers, and we'll have calls with both. Usually we can, get them to work it out together, while explaining the importance of the build time and the term, just to stay within the terms of the note. That helps too, because people seem to forget. But yeah, we just really try to help out and assist them as much as we can as a lender. Our note is between the borrower and ourselves, right, as Thrive. But anything that we can do just to help out and assist and communicate and talk through it with them is what we do. So it does help quite a bit, instead of just turning a blind eye to it and say, hey, work it out together and get your home built.
Fingers crossed.
We don't. Yeah, right. Fingers crossed. You guys work it out. I mean, we really try to jump in. Our draw coordinators are great at it. They are the first point of contact. And then, my assistant of the department, she will then get involved, and then I will get involved. But we really just try to work it out. I mean, even if we have to have builder meetings weekly with a borrower until we know they're back on track, we will. Is it time consuming? It is.
Yep.
But at the same time, we have to take care of our borrowers and our builders, right? As mentioned, we have that fiduciary responsibility to both.
That's awesome. Well, what would you say, you've been through a lot of these, can you tell me a little bit about, one of the worst scenarios or worst situations that you've had to help, somebody get out of when it comes to managing a construction loan?
Oh goodness! You asked what is one of the worst.
Yeah, give me a good one.
Yeah.
You don't mention any names. Don't get yourself in trouble. But
I would have to say the builder and the borrower both walking from the property.
Wow.
Not
one, but both.
Both. Yeah. So we did everything that I mentioned. There was disputes between builder and borrower. We did everything we could. However, the builder ghosted everyone. And then, of course, the borrower walked away as well. We could have, we always try working with, in the event that a builder does walk up, from a property, but it happens both ways. But if a builder does walk from the property, there are other options, right? We can help the borrower. We can make sure we go through the necessary steps with the borrower taking action to really do what they need to do to terminate that builder and to have it documented, and then reassigning a new builder, to the lien position and such. But if your builder and borrower both walk from the property, then yeah, that's a little bit more challenging, exciting to say the least. And with that situation, we had to, of course, go through our necessary legal actions and steps.
Gaining control of the property. Was that the kind of like gain control?
Most
if you're putting a playbook together, it's gain control of the property, gain control of the asset.
Right. Yep. Most definitely. That is your collateral. Right. Yep. And there's a lot that go along with it. People don't think about all of it, but you're thinking, insurance, make sure you have a new insurance, forced place insurance on that property. You have to pay your HOA if they come due, your taxes. I mean, there's a lot that go into it. And then finding and contracting a builder that's going to complete that home for you, with the hopes of the money that was remaining and such, and where you can then flip it and turn it, and still make profit. So
this is where people are going through the loan agreement going, God, do we have the assignment of the plans and specs? Do we have the rights to build the home from the architect? Those little details are important.
Most definitely. All of your, closing documents and any other disclosures that we've created along the way, custom disclosures that go along with these programs, right, are so very important. But yeah, I would have to say that was probably the most difficult or the most challenging. I mean, we worked ourselves through it. We don't like to end up in that situation, but unfortunately it happens. But there's all kinds of other, other situations that come up, but the one.
Did you guys decide to finish it, or did you sell it?
We did.
Oh,
no, yeah. So we finished it. We contracted it out with a builder. Had to work with them. Had to finish it. Under the company as the new owner. So we finished it, and then we were able to put it on the market and sell.
Awesome. Now, there's so many things that. That go into that. I just put a note down on my notes here. It's like, hey, we should do a podcast like on a foreclosure playbook, or that would be just so really neat, just to run down. Hey, don't forget to do this, and make sure you check this box, and get the insurance, like the one you said about making sure the insurance is there, and the assignments, how to roll it out. This is amazing.
That would be awesome. Yeah, you should do that. That would be awesome, and very educational for people in case they end up in that situation.
Yeah, I mean, there's a lot of decisions that go in there. What is the market?
Yeah.
Are we in a rising market where, hey, this value is increasing, or is it decreasing, and we need to get this thing off our books quickly? What's the cash implications? There's just so many decisions, and if you had that concisely done, it could have helped you out, it sounds like.
Yes.
No, but it's not often that you run into these situations where you have to gain control over the asset and get something completed.
It's not. We've been doing construction lending in-house since 2013. We started in 2010. But since then, knock on wood, it's been less than a handful of homes that have gone south, right? Which is pretty good with what, we have been servicing on average, anywhere from, 200 to 275 day in and day out. So if you look at, the percentage of loans that we've closed and got off our books compared to less than a handful of those challenging ones that unfortunately had, went south, it's a pretty good percentage. So not many, to answer your question. But yeah, knock on wood, not many.
No. And when we look at everything in the grand scheme of things, I mean, we've been through a lot in the last decade, right? Coming off the financial, collapse of 06, 07, we had rate changes, we had struggling a sluggish economy coming after that. We had overhauls with the CFPB and Reg C and dual and single disclosures and technology adoptions to meet those disclosures. And we had a pandemic, then we had super inflation, and
yes,
or like we're just seeing everything, right? It's so.
Oh yeah, right.
I would. You're definitely in the veteran status there of almost seeing it all, right? Knock on wood when we say that, if something else can pop up.
Right.
But this brings us to an interesting part of our podcast, and we call this the rapid fire. So, I've kind of given you the heads up that we're gonna have this rapid fire section, and for all of you that don't know, we just ask a series of my favorite questions to kind of conclude the podcast. But my first question to you, Mitzi, is what are you reading right now? It could be a podcast, it could be a movie on Netflix. Like what are you recommending to people as far as books?
Yeah.
What do you recommend?
Yeah. Okay. So, favorite series, I gotta go with Yellowstone. All the way Yellowstone.
Classic.
Yes, it is a classic, and I'm waiting until the new season comes out very soon. I hear it's being
second half, right?
Yes,
it feels like they've left us hanging here.
I know. Now, I did see that it's offered on Peacock. Well, I don't have Peacock. I don't even know what Peacock is right now. But yes, so I'm waiting on that one. Now, however, they've been talking about Matthew McConaughey replacing Kevin Costner. So I don't know how I feel about that. I'm a huge fan of Michael, but I don't know how I feel about letting go of Kevin Costner. So he is the show. But yes, so Yellowstone would be my series. He is, yes.
He was born to play the role.
He is, and he's great at it. There's so many good ones though on Yellowstone, but and then books. There's so many books that we have read as a company, really. But one book that I do recommend is Extreme Ownership. Extreme Ownership. I don't know if you've read it, Sean, but it's awesome. So it is about two veterans, and they created this book, and it's really a book that empowers anyone, whether it be personal or professional use. And it really talks to, really being a leader. Again, both sides, professional or personal, right? But really being a leader and, really having you understand that to become a great leader isn't about your position or title or being in management, right? It's about, your values and how do you overcome challenges? How do you take ownership and responsibility? Being able to coach up, down, left, and right, helping others grow, right, to become successful. So that is one book that I do recommend as Extreme Ownership. It's a book that I will, read over and over again, actually. The first time I read it, I think was about 8 years ago, maybe 10. But yeah, every now and then I will reread it. And I've shared it with all of, anyone that I've worked with. But it's a great book.
I got to check that one out.
Yeah.
Extreme Ownership.
Extreme Ownership.
Wrote it down.
Yep. It is a great book. Yeah.
I'll check that one. Hopefully they make the audio book. That's my go-to.
Yes. Yeah. I don't know if they have to have an audio.
They got to have an audio.
I'm sure. Yeah. I'm sure. Leaf and Jocko, they have to have an audio that's out there now. Those are the authors. But yeah, awesome book.
Okay, so next question here. When we think about others that are in this industry, that I love this question for so many different reasons. And you think about building a good team, and especially the draw administration team, that's going to live with you for a long time during the course of that loan. And
yes.
You're not out there hiring loan agents, but you're out there hiring draw administrators to help guide people through this process and support them. When you look to that role and you're looking for qualities of people to hire for that role, what's a great interview question that you like to ask somebody that's interviewing for a draw administration role? Yeah.
So I'll be honest, my question might be a little different from others. I already have the resume, right? So I can see on paper what their experience is, but really talking to someone is different. But my number one question I ask right out of the gate is, walk me through what your typical day looks like. By doing that, it really uncovers a lot about their experience, who they talk to day in and day out, how they manage their time, what type of portfolio do they manage? I mean, it really just uncovers a lot of questions that will then be brought up and then answers, right? So that is my go-to. That's what I start off with. And then there's multiple of other, interview questions I ask, but that is my go-to. I actually ask them to walk me through what their typical day looks like. Like, put me in the shoes of yourself and tell me what you do. All, from start to finish, tell me what you do. And it's a great conversational piece too. So
I like that one. I really like that one. I like the one you mentioned too about, tell me the types of loans that you're managing, because you could easily get caught up, right? In like, oh, you're used to managing commercial and having these types of relationships. And that's a little bit different than consumer construction lending. And, or not having any Govy experience in there. So it's important to kind of hone in on, well, what type of experience are we talking about in this resume?
Right. Yes. Yep. Multiple questions, but that's really what I start out with.
And then tell me about your day. You're really diving into, your experience, in your day as a draw administrator, right? Or it's like, hey, I wake up and I get a cup of coffee and I check in on the kids and I make sure they wake up. Like, is that the kind of stuff, or is it more like how they manage their pipeline of loans?
Right. Day in and day out. How do you manage your portfolio of loans? How do you do that efficiently? How do you time manage yourself? When do you do calls for communication with your builders and borrowers? It kind of gives you a sense of time urgency too, as far as when you're talking to them. And then it kind of opens up as far as, really, again, as I mentioned earlier, how do they manage their time? Because we all know working with builders and borrowers and funding draws is very important. These builders are relying on us, to fund draws efficiently and in a good time manner, because they have to pay other people too. So by really walking, me through what their day looks like, kind of tells me what their more experience is, who they work with, and again, opens up a lot of other questions. And then we go from there as far as, as we kind of mentioned earlier, is, zoning in more of the experience. How many loans do you have in your portfolio that you manage? What is your phone, service skills, all kinds of stuff, right? Besides a lot of other detailed skills that we talk about too during the interview.
Well, what are the, next rapid fire question is kind of adjacent to this, but, really part of it as well. What would you say the two best what are the two must-have qualities that a draw administrator must possess?
Okay. Well, there's a few. There's a handful.
You only get two. You get two. What are the two most important?
I know. Okay. So I'm going to lump two into one, and then I'm going to give you another one. So effective communication, including superior customer service skills. That's a must.
Not surprised there. Not surprised there at all.
Yep. That's a must. And then, oh goodness, there's so many important ones. Attention to detail. You're managing a portfolio of millions and millions and millions of dollars. So attention to detail is very important. But there's several others. Teamwork, all kinds of different other skills, to throw out there, to make sure that, hey, we're successful as a draw coordinator.
Oh, that's great. That's great. All right. Next question here. One-time close or two-time close? What's your favorite?
One-time close.
Gotta love it. Gotta love it. It's I think one-time close, I'd say, is mine as well. Yeah. Would you ever build your own home?
I would. Yeah. Now, Are you asking if I would contract it out or just build it with a construction loan?
Ooh, that's a great. So, if you had a construction loan, would you hire a general contractor or would you sub it all out?
Oh, I would hire a general contractor for sure.
Okay.
Yes.
You have one in. You already probably have one in mind, or multiple in mind that you'd go to.
Yes. Oh, I do. I have a list. So yeah, I would call them all and interview them, right? Just as borrowers do. Interview them again, even though I know their experience. It would be hard to choose from, but oh yeah, I would build a home. Yeah, hands down. Yep. Not contracted out. I just don't have the time to do that. But I would contract it with using a builder.
Oh, that's great. And this is great segue to my last and final question here. Approved or accepted?
Accepted.
Why?
Because whenever, I hear approved and accepted, I'm thinking builder mentality. Mm-hmm. Is your builder approved or accepted into the program? So, we do not approve builders. It is the borrower's responsibility to interview that builder that they're going to be signing a legal contract with, doing their due diligence with asking for references, doing this and that. They are approving that builder that they want to work with, right? We are accepting the builder into the program. Now, when I say accepting the builder, we are still doing our due diligence as a mortgage company as to what we feel is important, because we are, funding significant amount of monies during the draw phase to that builder. But yeah, accepted is what we use anytime we're, registering a builder to be able to use programs with Thrive Mortgage.
Oh, that's awesome.
To assist borrowers.
That's mm-hmm. so well said. Well, Mitzi, this has just been a pleasure having you on the podcast today. Thank you so much. Amazing wisdom that you bring to this, and I wish you the best success in all your efforts at Thrive. You guys have just done an amazing job building that program over the last decade. So thank you for attending the podcast, and we look forward to hearing more from you. Yes,
thank you, Sean. Always good chatting with you, and we appreciate Land Gorilla so much. So thank you, and thanks for having me.
All right, have a great day.
Okay, bye-bye.
This podcast is intended for educational and informational purposes only and does not replace independent professional judgment. Land Gorilla Inc. makes no representations, warranties, or promises for and disclaims any express or implied warranties related to content. Before acting on any information, you should consider the appropriateness of the information as it pertains to your unique business needs.